All right, so as we discussed yesterday, we got one thing left. It's a cash flow, and then we're going to go through all of it just to see where we stand. So cash flow is the last thing that we're going to do. If we're taking a look at it real quick, we got... One second. All right. Net income we knew was negative, and it's all right. We've known that. Depreciation, amortization. I'm still curious where that comes from. Depreciation and amortization, or just amortization of goodwill and intangibles. 241 is the total. 242. And all right. They took a loss of 197 million this year from selling something. I don't know what that would be. Their stock-based comp has gone up a little bit over the years, but is now trending back down. We did see somewhere. I don't know if I put it in here. But it was supposed to end soon. It's not there. They have a net decrease in 1.2 billion. From investing. We knew about their long-term debt, but they issued 14 billion. But they've repaid 13 billion of that. So in all, they have a change of about 35 million in cash. A lot of that is coming from debt, which we knew is how they operate. But I think for what we want to do, I might just take a picture of all this. And we can go through the whole thing today. How about that? All right, come in. So let me zoom out. View. Let's go to 90. Yeah. Well, actually, I want to copy this so it's in their colors. Get rid of that. Get rid of that. Cash flow. Cash money. Let's do that. Do that. Bada bing. Copy all this. All right, view. Let's zoom out a little bit. Zoom out a little bit more. Still a lot. Okay, if we're gonna do something, there's too many to take a screenshot. I'm just gonna make a chart of this. I'm gonna do cash from investing, cash from operations, and then the total debt. Right. Damn, that's so much though. All right, I got it. I know what I'm gonna do. We'll just make 2 axes for the debt. Insert. Unless, are these? No, 1095. All right. Move this down. Do what we do. Depreciation and so 1M, 2Ms, it's 1M. Cash from ops. We'll just call it operation. And we'll just do this. No, delete that. Cash from investing. Sheesh. And net change in cash. It's too bright in here with these windows open. Let's bring that down a little bit. There we go. Much better. Cash from ops. All right, there's really nothing to describe about this. Cash from ops. Cash from investing. Cash from financing. And then net change in cash. All right, there we go. Edit chart. We need to change this to E. E. Bring in. No. Bring in financing. Bring in that change in cash. Bottom. Make it bigger. Horizontal. No, we need the vertical. Show axis line. The net, this will be dotted. We'll call this cash flow. So a lot of their financing, as we saw, still high, but they're paying down a lot of it. What was I going to do? I was going to do something. Oh, yes. No, not log. Change it. Yeah, there we go. There we go. Okay. Cash financing was high, becoming lower. Cash from investing, they're not taking as big of a loss. And then cash from operations, we know that they are becoming cash positive there. Net income will continue to get better. What else they got? Write-offs, stock-based comp, other operating activities, and then change in receivable. Wow. Paste. Paste. More paste. A little guava. Guavacito. All right. So, as we can see, the sorry, I'm looking at the dog right now. He's on a couch over there. You can probably hear him scratching at the couch right now. Making his little bed. Has net income and thus cash from operations increases. We will continue to see an improvement in Affirm's overall cash flow statement. Statement of cash flows. Ignore. Not this statement, but that word. Other notable cash flow buckets. $148.2 million. Depreciation and amortization. This was a substantial amount. 197, almost 200 million. 197.2 million in losses from sale of assets. That also could have been them selling Returnly or whatever that company was that they got from Canada. They could have. I don't think they just turned it down. I think they sold it off for parts. $344. Compensation. There's another one. Was the write-offs. That was a huge amount. Huge amount. $460 million. Provision. Right off of bad debt. $181. In other operating activities. $1,282.7 $1,282.7 million in net decrease in loans originated, sold. Wow, they're in the hole from investing. $14,989. $14.4 in long-term debt issued. 13892.9. Repaid. I think that was all the major ones. Oh, last one. Repurchase of common stock. Lastly, we're going to write how we feel about this. As seems to be a common theme in the latter half of this report card, the big question surrounding Affirm is that they carry a lot of debt. Can manage to operate at a efficient manner, paying off existing debt and increasing their net income year over year. I see no issue with them turning their statement of cash flows around and building and slowly building up a, what's it called when you have a, let's just say abundance of dormant cash. All right. Insert, break, page break. We're going to do conclusion. And I want to insert another page. We're going to call this one documents. So for our documents, we're going to do financials. We're going to do this one. Notes. How do I copy? Ugh. Ugh. It's not what we wanted. Shareholder letter. Q4 2024 shareholder letter. Board of directors. All the stuff that we used. Investor relations profile. Financial information repository. So this is where you would go if you want to research anything that I have not laid out here, or you just wanted to see what they got going on. Q4 2024 earnings. Affirm brand book. Convertible note issuance. And obviously there's a lot more that we did like this. We can copy this link. This one was Fortune Business. Fortune Business Insights Pay Later Market Report. Got one more, which was Grandview Research. Grandview Research Buy Now Pay Later Market Report. Okay. So, what are we at right now? We're at 30 minutes. Then we can start closing out a lot of these tabs. Boom, 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 boom. It's like those boom people. I honestly have no idea what they even are. I just seen them on YouTube Shorts. Who are these Costco people, by the way? How did they become famous? No idea. All right. And then that's it. All right. So we've made it to the end. The conclusion I'm going to leave blank for tomorrow's purposes. We're going to go through it, everything that we have, and write a summary conclusion. We got the report card here. Actually, let's put one more on. There is something that I wanted to note. We want to do future outlook. We could probably do one more. So, future outlook. Service will continue to grow and become net income positive. Higher consumerism and living costs will sustain positive feedback loop. We're gonna change this one to red, actually. Red circle emoji. Change it back to red. Nope, that's not what I wanted. I think it's this one. Yeah, it's this one. Debt load. And we'll do this. Repackaged. Is that how you spell repackaged? Who knows? Repack. Yeah, repackaged. And rising revenue offset current risks. Future. Okay. Get this back there. Firm, table of contents, report card, about, key people, industry, the business, customers, customer mix, the market, buy now, play later, go market value, financials, all the juicy good stuff, yearly income, statements, cash flow, and then the conclusion. So, that's me jamming to some blues right now. But, like I said, tomorrow we're going to go through all this. Really just read all of it in front of us. make a conclusion from it. I've already pretty much got my conclusion for what I see from the company, but we're going to go through it, write the conclusion together. And yeah, that will be the first time that we have finished a Pear Does stocks, Affirm. It would be part 13, I believe. Weird number. That is just YouTube though. You know, we do have a few out on Twitch. I think it's 1, so technically it'd be like 14, and started this before I started streaming. No, but that's cool. We'll do all that tomorrow, and then next week we'll be on to something new.